You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time, yet again, for a little program I like to call Around These Parts, the Option Block. Your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, ever-scintillating Options Insider Radio Network. Quite a few programs for you guys to download and digest as we celebrate our decade, end of our first decade here on the Options Insider Radio Network. So that's right. Yes, you have 10 years worth of content to go download if you are so motivated. Easiest place to find it, of course, theoptionsinsider.com, or via the legion of podcast stores out there: iTunes, TuneIn, Pocket Cast, Google Podcasts, iHeartRadio, etc., and so on and so forth. Also available via our mobile app, available for iOS, Android, and the beloved Fire OS. You have your choice. You can pick your poison. You can subscribe to your individual shows like the Option Block like this, or if you're really hardcore, you want to get the full fire hose, we got it for you in terms of our whole network. That stuff every day, sometimes a couple things a day, coming to you via that feed. So strap in if you're going to go for that feed, because it's fun stuff. And however you listen to us after the fact, including the live stream every Monday and Thursday here via Mixlr for this Option Block program, however you listen to us, hit us up with your questions, your comments. We love to hear from you guys. And joining me on the old program today, starting off, let's go in order of proximity to lying about pickles. That means we go first to good old Uncle Mike Tosaw from RCM Wealth Advisors, who joins us from the former pickle capital of the world, even though we all know it was a lie. And now, I believe, the water capital of the world. Uncle Mike, welcome back to the program, sir.
You're banned from our town for life. Don't even come to our town, buddy.
You know, I had the brochure on my desk of the tourism board. I was sending people to your town every show. I was so excited to do it, and then you guys just broke my heart with your outright pickle gate, shall we call it?
You're banned, buddy.
I renounce all 8 visitors I've sent to your town.
I'm going to start tweeting Trump style on you, Longo.
I'm looking forward to Uncle Mike at least turning his Twitter on. He hasn't turned it on in a few years. He is over there. I believe it's M Tosaw, something to that effect, listeners. But check him out. Maybe we can force him to tweet again. And also joining us, I don't know what his proximity is today to the pickle or formal pickle capital of the world, but he is out there in the Riverside flooding capital of the world. He is the Greasy Meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Greasy Meatball, welcome back to the Option Block program. 3 episodes in a row, I believe, so it must be a new record.
Yeah, I don't know what's going on. It's just been it's been crazy town, my ability to get on the Option Block. But yeah, I just thought I'd I had a little bandwidth this afternoon, so I told Andrew, I'll do the show. So glad to be here. I
think Andrew just took one too many bits of umbrage at my many swipes against Maine, and he decided to, he's taking umbrage like Tosaw. Everyone's getting mad at me these days. Before I can outrage anyone else, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, and a big one today. It should be pretty exciting. A lot of big names popping off after the bell here, but before we get to those, Let's break down what we saw in today's activity. A whole heck of a lot of nothing really going on out there on the old street today. Most of the major indices closing around, pretty much unched on the day. I think the S&P had about a 6-point range, maybe 7 on the day. So not exactly the most tumultuous of days out here. Everyone perhaps keeping their powder dry ahead of the big announcements today and kind of really heading forward. Of course, we have some numbers tomorrow as well. Everyone kind of playing the wait and see game, perhaps. Again, most of the major indices, S&P, Dow, Qs, etc., pretty much unched on the day, and all that nothing translated to pretty much a little bit of nothing out there in VIX cash land as well, with VIX cash taking a little bit of an exhale here ahead of tomorrow, ahead of tonight, and perhaps ahead of the weekend as well. It flirted with the 11 handle ever so briefly today before closing right around 1075 out there or so. So the market, at least for the foreseeable future, not pricing in a heck of a lot in terms of the VIX cash. We'll get to the futures. You want to full VIX futures breakdown, listeners? Join us tomorrow on Volatility Views. This isn't the program for that. But that said, there's a lot of interesting stuff catching our eyes out there. Let's start with Greasy Meatball Land. What was catching your eye in today's activity, sir?
Well, it was just, another slow day. Vol looked like it was bid a little bit this morning and then completely died. I'll tell you, they're starting to make some big bets on volatility being relatively low for the time being. I was trading today. Some guy came in and bought 15,000 of the February 13 puts for $1. So that is where
wow.
That is where current belief is on volatility. So I'm not so sure that there's high hopes for a big vol pop here anytime soon.
When's the last time?
So that was the big thing I was noticing.
When's the last time you saw size puts on that level for that price going up? It's been a while.
I know. It's funny.
And not a sale.
Yeah, exactly. That's funny.
That's impressive. You listen to Vol Views at all, listeners. There were some flurries of puts over the last few months, but traditionally VIX options, shall we say, call heavy, call sensitive, and people loading up on downside in VIX. Not a thing we see very often, which is kind of interesting. Let's turn our attention now to the umbrage capital of the world. Uncle Mike, what caught your eye in amidst all of your umbrage today?
Well, I think that with what's going on today after the bell, this is going to be I think that we'll probably have some excitement in the very, very, very near future with all the earnings coming out. But today was just a day that, like you said, Mark, people are keeping their powder dry before the earnings announcement. One thing that did kind of happen today, the biggest news announcement that I could see, aside from what Mark was saying in the VIX, would be the peso. Not necessarily just the peso, but the Mexican stock market as well. And that it looks like Trump had made an announcement to the president of Mexico saying, well, don't bother meeting with me if you're not going to pay for the wall. And so naturally, the president of Mexico, he gave us his own form of umbrage and said he's not going to meet with Trump. So with that, we have the peso going down a little bit more. And it's one where I'm curious to see when the peso is going to start to get some life in it because, quite frankly, I have a vacation in Mexico in a couple of weeks, and it's not going to be very expensive for me that I'm excited about.
No, it's going to be cheap. I think you're in good shape for that to be a really inexpensive trip, which will be fun for you.
I was going to say the peso. When was the last time you talked the peso on this show? It might be a first in our multi-year history on this program talking the peso. Then I realized you got a little vacation coming. That makes sense why you got your eye glued to the exchange rate there. Speaking of gluing our eyes, everyone's got their eyes glued to the after hours. A lot of big names popping off. I'll let you guys choose. Where do you want to start? We got a lot of big names. We got Alphabet / Google, Microsoft, good old softy, Intel, PayPal, Starbucks. What floats your boat? Pick your poison.
Oh, let's go Alphabet.
Okay, let's go Alphabet. I figured you'd want to start there.
Let's.
Start at the top of the alphabet. Good old Google. I'm still not used to saying that. The old formerly Google, now Alphabet. The Goog with the L. It is trading right around the 850 or so level today. Let's see where it closed. 855.5 roughly out there. Selling off a little bit today, maybe a little bit in advance of the earnings. They were pricing in throughout the day about $34 or so shot. That works out to about 4% out there. And it seems like so far, at least, we're not seeing, now we are. Let's refresh the old screen there, and then we'll see it. All right, that's a little better. We're pricing in about $34, and so far in the after hours, Again, about 4%. Google off about 2.5%, about down to about 836 or so. So off about 20 handles. So an aggressive move, a size move to the downside, not exactly as sizable as they were pricing in. So interesting stuff. Google's been, of course, much watched of late for a lot of big developments, and of course, with all the talk of the new administration and the impact on tech, with all of the visa restrictions and everything else, a lot of these big names have been in the spotlight, and Google certainly one of them. Since we're talking tech, let's move on to good old Softy as well. Good old Microsoft. They were trading right around 64.05 or so today, closing about 64.25. They were up a little bit today, so getting a little bit of a shine on the old street today. They were pricing in about $2.75, so right around a little bit more than 4%, about 4.3% on good old Softy. Now, we've joked in the past, Microsoft used to be, until about a year ago, maybe a little bit longer, until about they had the CEO changeover, really, maybe a little bit after that, when all of a sudden this went from being the most reliable premium sale in the market to actually a pretty decent premium buy. They tend to outperform. In fact, we'll get to our survey of who's going to outperform a little bit later in the mail block. But Softy doing pretty well in that survey, which is not something you probably would have said a year or two ago. It was pretty much a lost decade, both from an underlying perspective and from a premium perspective. Great for premium sellers, not for much for premium buyers. So far today, it seems like the dark side may be winning. The stock only off about 0.5% in the after hours, dramatically south of that 4.3% or so that they were pricing in. Moving on to another big tech name. Used to be the big bellwethers when I was still trading in the height of the dot-com boom there. It was Softy and Intel that everybody had their eyes on, and I used to trade a lot of Intel. I stood in that crowd for quite some time. Intel closing out today, of course, good old INTC, closing today about 37.60 or so. They were pricing in $1.25, so a little bit less on that side, about a little over 3, about 3.3%. And this one, so far in the after hours, looks like it's up about $0.50, $0.60 or so, so about 1.5%. So nowhere near. They weren't pricing in a big move, and they're not delivering a big move. So far it seems like dark side is winning the day, but we're not done yet, listeners. No. We got some more popping off after the bell. We got PayPal, name we haven't talked about in a while here on the show, but I know a lot of you guys write in and like to trade this name. Let's see how they're doing today. They were trading right around 41.5 for most of the day. They closed right around 41.5 actually today. Their straddle was a little over $2, about $2.12 or so. So they were pricing in right around 5% on this name, and so far at least off about, looks like they're trading down about 80 cents. So right about a little bit shy of 2% to the downside. So again, if this is the order of the day, then dramatic underperformance, it seems like so far. Let's see if good old SBUX can break the train. This is, of course, Starbucks. They were trading around 58.5 most of the day, closed around there as well, off about $0.25 or so on the day. They were pricing in about $2.20, so a little bit shy of 4%, about 3.75% or so out there today. And this another one, so far at least, appears to be following suit of the underperformance here, with, again, pricing in nearly 4%, off about 1.5% or 90 cents in the after hours right now. So interesting stuff. Mark, what was lighting it up? Which of these names, maybe all of them, were lighting it up in the pit chat? And are you surprised, at least by the initial blush here, of underperformance across the board?
No, I'm not. I mean, we were looking, and Google vol was just about as low as I had seen into any earnings in a while. They priced that straddle really low. That's kind of been the theme across the board. You look at Apple and Google and some of these big names, and, there's almost no premium bump to trade between February, the regular February, and this contract expiring this month. The one thing we did notice is that if you had a directional opinion, there were diagonals that could be put on in super favorable formats. Now, keep an eye on Google. Google and Amazon in particular tend to be names where the conference call can completely change the direction of the stock after earnings, because we all know these earnings are just kind of there could be alternative facts within these earnings, let's just say. and so you actually need to actually talk to listen to the conference call to get what they actually said. So especially especially Google and Amazon, they tend to have a big turnaround. So, hope is not lost for Google, but yeah, I'm not completely surprised that the initial response has been small.
That reminds me that some of my best, I would have to say the best gamma scalps I ever had were after hours, immediately in the first blush of the Intel earnings announcements, where the swings in the underlying would be so dramatic, and I would routinely work very aggressive, shall we say, and by aggressive I mean maybe the opposite of aggressive, very wide, very speculative gamma scalps, and I would get filled sometimes at levels the people around me in the crowd would look and just stare in shock and surprise and amazed that there was actually people trading down there. So yeah, those were great. And then you immediately see the underlying turn around the other way. You get the other side. You scalp a point or so, or half a point, 3/4 of a point for however many thousands of shares. It was a nice way to go, but it wasn't always the case. But it was those gamma scalps around earnings are indeed the stuff of legend. Uncle Mike, I know you watch a few names. You watch a lot of the broad indices as well. Anything catching your eye in this slew of earnings here, as well as this apparently, at least first blush, this rash of underperformance from an earnings straddle? We asked people who's going to outperform this week. Maybe we should ask who's going to underperform the worst.
Right. Yeah, I think that I predicted StarBucks would be the one that would outperform of the bunch. So I still got a shot, it looks like, in the question of the week. But the other thing that I noticed today, Caterpillar, they reported before the open today. And just to kind of add what Mark said, there are a lot of things to where just the number doesn't necessarily tell the tale, because Caterpillar's and this is just something I saw real briefly, Caterpillar kicked butt in that they really did well with their earnings, but their revenues were not good, and they lowered their guidance for the future. So with that, Caterpillar is down 1% on the day. Not a huge deal, but I think it makes sense that if you are going to be an earnings person and really sorting through the earnings, just the number itself, it just tells a small portion of it. You need to really listen to the call. You need to have a full feel of what's going on should you want to invest in a stock or an option or what have you.
Yeah, it's a lot of stuff going on. If you guys, I know you like your earnings stuff. If you have questions about the earnings stuff, if you want to hit us up earlier, I'll allow it. You don't have to wait until the mail block. A lot of people flocking in there, I think, to the live to hear us talk the Googs and all the other fun stuff. So yeah, we're going to keep an eye on these. Obviously, like Mark said, you still need a little bit of the conference call to trickle out to kind of get these movements settled down a little bit. So we're going to let that conference calls come out, let that move kind of bake in a little bit. We'll keep an eye on them throughout the show as we keep on rolling, and we'll check back in as we roll on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, moving from all those earnings tech names into ladies' handbag and apparel and everything else. Of course, it's the Odd Block, the portion of the show where we dive deep into the weeds and explore the deep, the dark, the uncharted waters. Some may say the dangerous and dubious waters of the options market. We go where calmer and saner heads fear to tread. And that dangerous journey starts today in Kate Spade, of all places. You know, when you think danger, you think, of course, Kate Spade. Ticker symbol, Kate. Kate, closing today, pretty much unched on the day, $18.67. Pretty much, like I said, unched on the day. It's the name that does a little bit shy of 7,000 contracts today, doing a little bit more than that, to the tune of 41,205 to 1 calls over puts. That should give you some inkling of where our attention was drawn. Yes, of that nearly 41,000 contracts, 40,803 were calls. Only 199 were puts. So 205 to 1. That may be a new record for the Odd Block in terms of call to put ratio. I'll have to do some research on that, get our top men on that. So as we keep on rolling, what caught our eye out here? It was an interesting vertical. It was the April 17-19. This is where pretty much the lion's share of all that call volume came, going up, starting off the day 13,500 times in 3 blocks over there on the SIBO. The day finished with it going up about 17,500 times, a little bit on the 17 line, a little bit more, 18,000 and change on the 19 line. That could be a bit of a ratio. Could be someone else piling in, being attracted by the volume going up out there today. Total, again, of about 17.5 on the main 17 strike. That spread going up for $1.80, at least in that initial 13,500. I'd imagine the latter kind also getting prices pretty similar. This has all the earmarks of what we term here on the old odd block a house money roll. This is someone who's perhaps laughing all the way to the bank and deciding to close out the strike that he's sitting on and then decide the party isn't over yet. I got some casino money in my pocket. I got some house money in my pocket. I want to burn it. I'm going to come back in. So he's closing out on the 17s. Paper's selling those. There's about 17,000 and change open on that strike. So clearly closing on that side. Only 1,500 open, though, on the 19. So he's reestablishing. He's not just taking his money and going. He's reestablishing here on the 19. He says, you know what? The party isn't done out here in Kate Spade, and I got some house money in my pocket. I'm going to put it where my mouth is. And this has been an interesting one to watch if you have been keeping an eye here on the Kate Spade and related names. This one peaking back in April of last year, hitting a high of looks like about 26.5 or so. Right around earnings in April, then they got their legs kind of clipped, or their wings clipped after that, and it kind of hasn't really looked back ever since until right about the end of the year, when this name just rocketed up with a bullet from about 18.5 up to about lower than that, actually about it was in the 14.5 range, then gapping up a few handles just at the end of December, back into the 18 range. Kind of been vacillating ever since that size move. Obviously good for our friend out here in April who's sitting on some deep in the money calls. Interesting one, Mark, to kick things off with. Fairly well-timed trade, obviously, even though he wasn't really sure on the time frame, hence him opening in April and not in the weeklies in like December. But still interesting, and also interesting that he thinks the party is still going, that this 26.5 level, maybe the hit back in April, maybe could still be in the horizon. What's your thoughts here on our friend rolling with some house money in Kate?
Well, you can't blame the guy for rolling with house money. Now, how good is Kate Spade going to make that kind of run? Probably not, but why not take a shot? You've been right once. Maybe you think there's a lot of Momo to that name. There has been some talk of revitalization in some of these mid-tier high-end retail, if you will. We've seen a really good move out of Coach. Coach is relatively correlated with Kate Spade, so maybe, but I'm thinking it's just kind of a, hey, why not let it ride, at least partially, and see if you can turn this decent winner into the home run of the year.
Yeah, if he gets another move like he had back in the end of April, or end of December, then he certainly will be laughing all the way to the bank, even more than he is now. Meanwhile, keep on rolling into our next name here, our next victim on the old odd block. This is a name we talked about before. This is the Tech Spider XLK. Talked a lot about XLF recently, and the financials have been rally ho mode post-Trump. Haven't talked a lot about the tech recently, so it's an interesting time to check in with this name. Closing right around $50.50. Pretty much off unched on the day. Not a huge day and net for them. It's a name that does about 20,000, nearly 21,000 contracts a day, doing nearly 91,000 today, about 5.5 to 1 calls over puts. So that should give you some inkling of where the action was today. If you want to find it for yourself, listeners, just scroll on down your screens a little bit to the Feb weeklies. You'll find it pretty quick. They are the weeklies. Actually, there were two strikes that were really kind of lighting it up here, as there was a Feb weeklies on the 51 strike, and we also saw size on the regular Feb 51 strike as well. So we will start there because that's kind of what caught our eye to begin with, including a one block of 36,292. Bit of an odd block, but c'est la vie, going up in one chunk over there on the Philly paper blasting it out to the tune of for 31 cents. This looks like a close of of calls that paper bought not that long ago for 26 cents. So taking a nickel, I guess maybe discretion, the better part of valor here. Total of 41,000 and change going up on the day on open interest of actually 44,000. So pretty sizable open interest on that strike. Also worthy of note that about 23,000 of the weekly aspiring on the third 51 calls also went up today on open interest of 22,000 there as well. So perhaps a little bit of double closing going on this strike. It is kind of odd, if this is indeed closing, that our friend kind of given up the ghost so quickly. He obviously had higher hopes for good old XLK. This name, if you've been watching it for the past year, has kind of been on a bit of a nice slow rise, hitting its nadir back in the February timeframe, like a lot of names did last year. Then down in the, how low did it hit? About 30, looks like about 38.5 or so, and then rallying all the way to these levels here, right around the 50 level. So our friend here, perhaps thinking that rally was going to come a little bit faster, a little bit harder. When it didn't materialize, he took his nickel and he headed for the exits. Is that what you think happened here, Mark? Or you think this is unrelated paper going up here?
You're right. The amount that he would, just the pricing seems a little off. But, that still is the ye old Sherlock Holmes thing, right? If your most logical conclusion, even if it's not that logical, is likely to be the answer. But, who knows? Maybe this is additive.
Yeah, we don't see a lot of people closing out for a nickel, but then again, we've seen worse closes here before on the odd block too. So maybe he did some fresh analysis on good old XLK, decided perhaps it wasn't the stalwart he was hoping for, and decided to get the heck out of Dodge. We can't fault him. He got paid to do it, so that covered his commissions and everything else. So that's there are worse ways to close, and discretion can be the better part of valor sometimes when trading. How often we've seen people putting good money after bad. The timing a little interesting, particularly on those weeklies. I wouldn't mind digging into those a little bit more and seeing exactly. Clearly, our friend here perhaps had a little bit of an interesting axe to grind and was doing it in the weeklies as well as the monthlies. I don't think that was a time spread going on there, but I have to dig into the weeklies a little more to know for sure on that. Meanwhile, let's keep on rolling into our final name/victim on the old odd block. This is the JPMorgan Alerian MLP Index ETN. Say that 5 times fast, I dare you. This is ticker symbol AMJ, closing today $33.88, up about half a buck or about 1.5%. This is a name that does about 3,000 contracts a day, doing more than 10x that, doing just a little bit under 40,000 contracts today. Calls leading the charge, but that isn't what caught our eye out here today, at least not outright, perhaps synthetically. We're talking here some puts, indeed some puts and stock going up out here in AMJ. In particular, if you want to find them yourselves, listeners, scroll on down to the regular monthly March 32 puts going up. When we first noticed these, paper gobbling up 5,000 for 45 cents. At the end of the day, total of 10,000, so another block of 5,000 followed there on the heels, with about 150,000 or so shares going up not too long after that. So buying puts, buying stock. This, our friend, is doing some delta neutral puts here. Only 2,200 contracts open on this strike, so this is not closing. This is indeed opening. Also worthy of note that there looks like a pretty tight vertical, or perhaps a stupid going up there in the March 33.34, also going up about 11,000 by 13,000 times there. Some size open interest on the 33s as well, so perhaps putting on the and then also rolling the March at the same time, which would be kind of an interesting play. There is a dividend on the horizon out here, so perhaps there is some of that factoring into this analysis as well. Looking back at the year that was for AMJ, it's another one that had its nadir back in February and has since looked a lot better, hitting its recent high. Actually, it's like its 52-week highs recently, right around these levels here, just a little bit shy of 34. Mr. Greasy Meatball, take us home here. Size, puts, and stock, perhaps with a call roll to boot here in good old AMJ. What's your take? What do you think here? You think our friend is crazy, or is he crazy like a fox?
Well, I don't know. I mean, these Alerian people that trade in these MLPs, you never know what their axe is to grind. They may have some weird position with a bunch of the other MLPs. They may be involved in this thing, or they actually may be directly involved in the pipeline. It's very difficult to read some of these. My guess is that, this guy knows what he's doing. The guys trading in these MLP things are typically not doing it because they are just wanted to dabble. This is somebody that is heavily involved in this thing, and my guess is that he's as foxy as they come. Let's put it that way.
Speaking of as foxy as they come, we got Uncle Mike and his weekly dose of the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, this is indeed the portion of the show where we break down the world of option strategery for you to digest at your leisure. Before we do that, though, a lot of you guys are still keeping an eye on the earnings. Let's do a quick check-in here. As we were saying at the top of the show, seemed like a resounding underperformance, a resounding meh, as some people on the show are wont to say. I won't say who, going into this name. And let's check in and see if that's still the case. And it appears to be, listeners. Google was pricing in about 4% move going in, looking at their at-the-money straddle. Right now, off about 2.5% out there. Good old Softy was pricing in a 4.3% move, up about a little over 1% right now in the after hours. Intel pricing in a 3.3% move, also up about a little less than half of percent right now, so kind of shrugging the shoulders out there. PayPal pricing in 5%, a whopping 5% move. So far, 0.75% out there. So 4 out of 5 so far, dramatically underperforming. Let's see if Uncle Mike's pick, good old SBUX, can break the chain and be the outperformer from an earnings volatility and straddle perspective. They were pricing in a little bit shy of 4%, about 3.7%, and they're off about 3.3%. So underperforming, but nowhere near as depressingly as the other ones out there. So Uncle Mike, you may be onto something here. Your guess of SBUX, perhaps not as crazy as it first seemed, sir. So with that victory perhaps in mind, what you got in store for us today on the strategery block?
Well, that's a good thing when it's not as crazy as it first seemed. I've heard that a lot throughout my career. That's not as crazy as it first seemed. Today, I want to go over, kind of give an update on a collar that we've been doing for a while now on IBB. IBB is the biotech index. Not a huge position, but I think it's a good educational piece for today in terms of what we're doing and how this can relate to a longer-term play by using shorter-term options. Way back on September 23rd, we took a position on IBB, and we'll just say 100 shares, and we actually bought it at $299.51. And we did the October 310-290 collar, and it was actually a debit of 90 cents. Well, if anyone who follows IBB, if you look back in September, IBB got its royal face ripped off over the course of the next month or so. So on there, what we actually did on October 21st, and we made our adjustment, we took profit on the 290 put option. We got out of the call for a nickel, and then we got out of the put option for $21.60. So overall, the options gave us a profit of over $20. Now, with that money, what we did is we dollar cost averaged. Now, dollar cost averaging is a concept that a lot of financial advisors talk about, to where you just put money in the market constantly, and by averaging in, when the market's lower, you can buy more shares. Well, this is an example of how you can use the market to dollar cost average. And so with that, we were actually able to buy an additional, let's just from a ratio standpoint, 8 shares on October 21st. We got into the additional 8 shares at $268.35. That's how much IBB got its face ripped off. And by doing that, that brought the average price down to roughly $280 per share. Now, at that point, what we actually did was we set up the collar again on the 100 shares, and we sold a 280 call for $3.72, and we bought a 255 put for $3.90. Long story short, the market did increase, and we were actually able to become ahead. Now, here's the magic of option trading, folks. The stock can totally go against you, and you can actually find a way to make money. So on there for the following month, for the December options, we did the 290, 255 collar. And then we had to pay a little bit of we had to have a kind of a wide downside just because we didn't want to pay a lot of cash for the put option side of it. So on there, IBB then went down a little bit more. We got out of the 290 call for a profit. We ended up losing everything on the 255 put, which is fine because it was acting as protection. It was well financed. We then did the January 280, 255 put. We continued to do that. Broke even on that for the month of January. And now for February, what we did the other day was, it was on January 20th, about a week ago, we did the 275, 255 put. And what we did is we sold something pretty much right at the money. And the rationale for that was that if it were to go higher, we were going to collect some premium on it. We'd still be ahead, but we had wanted to take more of a cautious stance on it in case it went down. Now, here's the benefit of what ended up happening. We sold a 275 call for $6.33. We bought a 255 put for $2. And as IBB went down, we were actually able to take a $2 profit on the 275 call. So long and short of everything that's happening right now, we're actually in IBB with a cost basis of roughly 270. If you don't count the long put, we're at 277.5. And if you do count the long put and just assume that it's going to expire worthless, which we may or may not get out of it by expiration, who knows, then we're in the 279.5 basis on IBB. The point of this is that this is an example of a longer term holding. I don't have necessarily a huge short-term bias on IBB. It's the biotech index, and it's one that over time, I think that with the drug stocks in there, the race to find some drug for Alzheimer's, with a lot of things that are happening, I think this is going to work well throughout time. But what's benefiting this in the short term, which I encourage everybody to look at, not only in IBB, but just with anything, are the Trump tweets. I remember when this was above my covered call a couple weeks ago, when President-elect Trump had a press conference, and he opens up with how unfair the drug bidding is. Now, right away, IBB went right down. My covered call was in the money, and I was thinking, well, should I roll it up? Should I do it? I was actually analyzing it at the time, and Trump came out with that tweet, and I basically said, okay, that makes my decision a lot easier. Thank you, Mr. President-elect. So what's happening here is that we have a long-term holding. It's a very well-protected long-term holding, and that 90% of the asset is protected. And occasionally, if you get a tweet like that, you can benefit from it. Now, on the flip side, at some point, he's probably going to say something that's going to make IBB go higher and possibly give us an opportunity to sell at a higher price. Now, you have to protect against the tweets that don't work your way, because then let's say that I had already gotten out of my covered call and rolled it up, and he'd have tweeted after the fact, then of course that can go against you. But by using a collar and by using this in a strategic manner, this is an example to where we should, if we'd have just bought the stock, we'd be down over 10% at this point. We'd be down about 10% at this point in time. But we're only down a couple bucks on this. And the reality of this is that we have the ability to be at a very nice profitable level when we just make it halfway back to where we got into it in the first place. The magic of options, folks. And that is the strategy block for today.
That's one to grow on, listeners. We got a little bit of time, so it's time for you guys to take the reins with the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Like the man said, this is the portion of the show where we break down what you guys want to talk about, whatever's on your mind, and everyone's got earnings on their minds this week. So I think we'll start there. A lot of you guys already voted in our poll, our question of the week this week. If you haven't, still got a few days left, but maybe after today, it may not be as much of a challenge, much of a battle as it was at the beginning of the week. We asked you, starting on Monday, lots of earnings on the horizon. Which company will outperform their earnings straddle by the largest margin? We asked you, good old Alphabet, or was it Softy, or was it Intel, or was it SBUX, good old Starbucks? I believe, Sebastian, did you guess Microsoft last time?
Yeah, I think I did.
You guessed Microsoft. Tosaw guessed Starbucks, and I guessed good old Google. As of right now, well, before we get to the real world stuff, what do you guys think is winning? Do you guys want to keep with your bet? Do you want to change? Now is the time. Mark,
I'm doubling down. I'm gonna double my bet.
You're doubling down on SBUX, huh? What about you, Mark?
Yes.
Well, my guess in terms of what's actually moving, or what do people?
What people are voting for? There's two ways to win. What people are voting for?
Yeah.
Oh, hold on. I'm not doubling down.
That's Google. I'm guessing that's still Google. Would be my guess.
Yeah, I'm going with Google too, if that's the question.
Okay, well then you're both smarter than you look, because Google is still winning the poll, 42%. That may change after today's numbers. 32% number 2 for Softy, and then 15% Starbucks, which is actually seems like it has the best chance of actually outperforming their straddle, let alone by any significant margin. And Intel, the dog, they're also the dog in real life too. So we'll see how that goes. A couple days left on that one, though. It may be a moot point after this evening and after tomorrow. We'll see. The earnings may turn around forthwith, so we'll keep an eye on those, check back in on those before the show is done. Meanwhile, let's hit up some of your questions. Uncle Mike, I knew this one. I wanted to give you a chance to answer this one. We discussed it a little bit quickly. It came in actually to our advisors option show today. So we discussed it a little bit earlier on that show, but we don't do the show live, so our live audience hasn't heard it yet. And I wanted to get your thoughts on this one anyway, because it's right up your alley. If I could just find it here, bear with me for 1 second. Here it is. This is a question from Tim Avery, and he wants to know, if I choose an advisor that uses options, do they traditionally charge higher fees than straight up equity advisors? We get variations on this question quite a bit, so it probably makes sense to actually discuss it. Since you're our token options oriented advisor, what do you have to say here for our friend Mr. Tim?
I would say it depends. If you're looking to be speculative, then I would say the answer a lot of times is yes. If you're looking to be kind of a mix, like what I am, somewhat speculative and somewhat protective with it, then I would say that I know my fees are in line with most advisors. But usually the more speculative you go, the higher the price it's going to be. And a lot of the guys that are more speculative are typically probably going to be more commission-based. I am not. I'm fee-based. So I would say if you're looking for someone to double your account or something like that, then you're probably going to pay a little bit more for that, because if the guy is good enough to double your account, well, let's face it, he deserves to be paid. If you're looking for someone to write some covered calls for you, if you're looking for somebody with the idea that you're trying to maybe hedge some stock or something along those lines, from my experience and the other advisors I know that are in this that do it, I would say it's probably in line with most financial advisors that don't even have a clue of what options are.
Yeah, there's this perception that options are a high-touch thing. They should cost more. Certainly, you are bringing in a little bit more expertise and a little bit more. You're doing a little bit more for the client than the guy is just going there 60-40 or 60-30-10. Give me my money. But how that breaks down, I think, is a complicated question, but an interesting one. And one, if you like that kind of stuff, listeners, we have a whole show devoted to it called The Advisor's Option. Check it out if you are so inclined. But I want to give Uncle Mike a chance to give his 2 cents on that one. All right, this one comes in from KD Diddy. I like that handle. He asks, he said this is like a day or 2 ago. He said, hey, I managed to buy 100 NAK, N-A-K. This is Northern Dynasty Minerals Limited. Feb $3 puts for 25 cents when the stock was trading at $3.30. Do you have any idea how this could happen? I'm not sure if I should feel lucky or stupid. Well, I'm looking at NAC right now. The stock has sold off a bit. It's south of $3 now, $2.95. So those puts are 25 cents bid at 35 cents. So maybe you're feeling a little bit luckier. I'm not sure what the last part of your question is referring to, unless you thought maybe the strike was and maybe the other way around. Maybe you had it backwards in your head. Maybe if you thought if the strike, you thought maybe they were 30 cents in the money, and so you bought them for 25 cents. So therefore, you were getting them for effectively for 5 cents underwater, 5 cents of free money. That would be a great trade. I would say yes, but that's not the case here. The stock was 30 cents. They were actually out of the money puts. So I think 25 cents is maybe actually a little bit rich for those. I'm not that familiar with Northern Dynasty. I'll have to dig into them a little bit. The stock sold off, so maybe not. But in general, it's not like you got some. I don't think you should feel stupid. But I don't know if you should feel lucky like you got the scoop of the century either. I think I see what you were trying to get at. I think you thought that they were 30 cents in the money and you scooped them for 25. If that was the case, then that would have been pretty sweet. Unfortunately, like let's say the stock was at $2.70 and you bought the $3 puts for 25 cents. Yeah. Scoop those all day long, as many as you could possibly get. That's a nickel in your favor every time you do it. Other than that, this is a good trade though. It seems like it's working out pretty well. I have no axe to grind against it. This name looks like it peaked at about 340 not that long ago, a few days ago, and then earlier this year, when last year was trading down at 34 cents. So I guess if I had to lean anyway, looking just cursorily at this graph, I would lean to the dark side like you too. So maybe this is going to work out in your favor. I don't know, Mark, do you or Mike, any of you guys watch NAC, Northern Dynasty Minerals, and what are your thoughts about KD Diddy's scoop of these 3 puts for 25 cents?
Dude, the only NAC I follow is the band that sang My Sharona.
I was going to make the exact same joke.
That's why I keep you
beat
two
him to the punch.
That's why I keep you two on mute.
You did.
For most of the show. For nuggets, for chestnuts, like that. Yeah, that's a good trade. I think it's a fine trade, KD did. You should be very proud of that, and it looks like it's working you out. So hopefully it keeps going your way. Let's see. Yukoner, I like the handle. He asks us. This is maybe a good one. This is going for all of you, actually. He wants to know straight up: are covered calls still a viable strategy in a 401k these days? We get analogs and different permutations of this question on a regular basis. Obviously, a lot of the audience wants to use options to generate income, to get premium, and that's a little bit more of a challenge these days. VIX cash trending to the south. Volatility kind of weak. The market inexorably rising, so that's also a challenge for covered call traders who get scared about having to roll and adjust and babysit their positions, otherwise they get called away. So that combo of the two is not usually screaming out for covered calls. But that said, it's still an interesting thing to pursue. Maybe Uncle Mac will start with you, because you do a lot of covered calling and a lot of rolling on a regular basis, particularly in 401ks. What do you have to say here to our friend, Mr. or perhaps Mrs. Yukoner?
It's tough right now. If you want to really work a covered call strategy, you have to be selective of your stocks at this point, just because there's not a lot of premium out there. One thing that I've typically found when we are in environments like this, if you do have to do covered calls, I'm personally not in a ton of them at this point in time, just because of the environment with which we're in. But oftentimes, if you're normally looking to go 1 month out, you got to go 2 months out if you want to get the same premium. Now, the benefit of it is that you still get the premium, and then if the stock does go higher right away, then because you didn't get a lot of premium, you had to go 2 months out for the premium in the first place. It's kind of like getting only 1 month of premium, because you're going to roll the thing up or do something with it anyway. So it's tough right now. I think that if you really are in a huge need for income, you need to do one of two things. You need to either settle for less income, for one, or go out for a further time frame. What I'd advise against is trying to find more of the high flyer stocks that you're not normally using. Now, if you're typically writing covered calls on Amazon or something like that, then and you have a plan for it, that's fine. But if you're typically someone who is writing covered calls on like Microsoft, JPMorgan, and the premium's just not there, don't go switching to Netflix or Priceline. That's a big mistake. But for right now, I think it's good, but you just have to weather the times or look for a different strategy.
Ooh, switching to the Widowmaker, getting dicey. I concur with that, sir. Mr. Greasy Meatball, any thoughts on this? You probably have a lot of covered call hunters in your pitch chat there who come to your webinars. What do you say to those folks who are saying, yeah, it's kind of hard these days?
Well, except for it's not. You just, again, like Mike said, you have to be selective. One thing I'll do when vol's low is I'll use like a call spread instead of just straight call. That way you can recapture the stock if we get kind of a breakout higher. The real issue I see with covered calls in a low vol environment, I mean, the vol's still overpriced, but what ends up happening is you get this kind of creeping, the volatility's low, but it's only in one direction. And that can put a real problem on call writing. In a market like this, where we are meandering higher, but skew is steep, it can make sense to use like a put right strategy instead of cover calls.
Yeah, we have talked about that before, getting that nice little pop from the put wing of the volatility skew rather than the call wing. Some people have a hard time wrapping their heads around that. They can do it, obviously, with the synthetic way, doing in-the-money covered calls as well. They have a hard time giving up that upside, even though the volatility pop could be worth it. But that's also a way to perhaps a strategy to consider in these lower, shall we say, volatility times. All right, let's keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, it's the segment where, of course, we tell you what we're keeping an eye on for the rest of this week. Before we get to that, let's do one last time around the horn for the big names popping off after the bell today. Like we were saying throughout the show, bit of a volatility underwhelm this afternoon. We were hoping at least one or two of these names would break free, break the chains of that earnings straddle, and show some moves, show some vol. So far, not so much. Let's start off once again. Google Alphabet. They priced in about 4% right now off about 2.86%, and Softy pricing in about a 4.3% move, up about a quarter, so less than 0.5%. Intel pricing in the most anemic of moves, only pricing in about 3.3%, and also delivering the most anemic of moves, up about a third of a percentage point. A good old PayPal pricing in about 5% and off about 0.75 of a percentage point. And last but not least, Uncle Mike's favorite, next to Dollar Tree and Dollar General, of course, good old SBUX. They were pricing in about nearly 3.7%, and so far about 3.75%. So there we go. Our first /slight overperform of the day. Uncle Mike, does that make you feel better about your pick?
Winner, chicken dinner, baby.
You're the only one eligible for victory now on our poll. That said, Uncle Mike, aside from your skin of your teeth victory, we'll see how that plays out tomorrow, but seemingly at least skin of your teeth victory. What else is catching your eye for the rest of this week into the weekend, sir?
2,300 on the S&P. The Dow 20,000 was the big number that everyone was looking at that made history. We crossed the 20,000 mark on the Dow, but the next one, the other number that is 2,300 on the S&P. We hit it earlier in the day today, and I would like to see us close above it tomorrow. And if we close above it tomorrow, then on Monday's show, I will say my saying.
Oh, well, you just scared away all of our listeners for Monday's show. And Mr. Meatball, what are you watching, I should say, for the rest of this week into the weekend?
Yeah, we had some earnings today. We'll see how things react. Again, they're still, you never know how these things are going to turn around overnight. But just earnings palooza over the next week. And then non-farms start getting on the radar next week. And actually, I think we have a Fed meeting next week. So put that on your radar.
Yeah, there are still a few things to watch. Non-farms, of course, like you mentioned, coming up next week. They do have GDP if you're macro number heavy tomorrow. Also have some other names coming off tomorrow. We got Chevron and everyone's favorite BT Radiance. Also had Southwest coming off today as well as E-Trade. So a lot of big names popping on, not just the ones that we talked about here today. But it's nice. It's nice to have earnings season. We always like to sink our teeth into something nice and tangible and hopefully meaty here as opposed to all the ridiculous macro things we have to deal with, it seems like, on a day in, day out basis these days. All right, and that music means we've come to the end of another epic journey through the world of options. Listeners, we kicked it off talking about a bit of a resounding meh in the earnings atmosphere. We'll see how that plays out after the bell. Right now, it seems like SBUX, one of the laggards on our poll, maybe the only one that has even a prayer of winning. So we'll keep an eye on that one for you. We also, of course, broke down a lot of unusual activity, including out there in Kate Spade and XLK and our old friend, the JPMorgan Alerian MLP Index ETN. A mouthful, if ever there was one. We debated your votes on the old question of the week. An interesting one this week, as well as scooping some puts in NAC and the continued validity, perhaps, of covered calls. But before we go, let me check back in with my cohorts here, my partners in crime, see what they're cooking up that may interest you. Mr. Greasy Meatball, we'll start with you. You guys always have a webinar or something going on over there in the land of the pit. So what's on the horizon that our listeners can look forward to right now, sir?
We're going to be doing a class on being long gamma and owning premium starting the Saturday the 4th. So go to optionpit.com/events to check it out. As usual, listeners, 25_off, OFF, all capitals, and take an extra $25 off.
If they sign up for that, do they also get free access to your scalping of Roe? The deep, dark exploration of all things Roe?
Free row.
Free row. If that's not a selling point, sir, I don't know what is. You put every email you send out should have the exclamation subject line, free row. Your open rates, your conversion, everyone and the mother is going to open that. Who can resist free row? It's amazing. All right, sir. Uncle Mike, it's a tall bill, the top free row, sir. What do you have for our listeners?
I do not have free row, unfortunately. But what I do have is I have a wonderful book to read since we're talking about Starbucks, for less than the price of a Grande Mocha Latte at Starbucks. Go to Amazon.com and type in my last name, Tosaw, Tosaw, and you can get it for your Kindle app.
Ooh, Kindle. Look at you, all tech forward and whatnot. Check them out on Amazon. Good old Uncle Mike Tosaw, like he said, Tosaw is the way to spell it. And if you want to hit him up yourself, some questions, comments, mtosaw@rcmfs.com. You got a question about one of his crazy strategy blocks, how he's adjusting something that crazy? Check on your silver collar, by the way, too, Uncle Mike. So maybe we'll do that again next week. Hit him up over there, mtosaw@rcmfs, if you are so inclined. On behalf of Uncle Mike and the Greasy Meatball and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for tuning in live and for sending in such great questions. We love to hear from you guys. And we'll see you next week for more The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.